Alright guys, welcome to this video. This video is just going to be a very quick and easy trading tip, and I'll probably take a look at I'll probably do some analysis of the markets as well. So yeah, what I want to talk about today, the best trades work straight away. So it's a very simple rule, the best trades work straight away. This is just something that I found through my years of trading. If you don't know my experience, you can check out my website, jbmarwood.com. I am a systems trader, but I do like to look at charts. And I used to be a discretionary trader completely, so I have found that the best trades work straight away, and there's good reason for that, and the reason for that is risk management. Okay, so if we look at this chart of the Nasdaq 100, this is futures. Let's say, for example, you make an entry here. This is on the breakout. You've seen a breakout, so you enter on this candle here. Now, obviously, if you enter on the open, it shoots up. You're in the money straight away. You've got a good trade going almost instantly. Now, why is that good? Well, for a risk management purpose, as soon as it's opened, you can be moving your stop up, managing your risk, and making sure you don't lose too much money on this trade. So what happens if you go the other way? Now, here you go. If we look at this candle, we've got a breakout here. So if we imagine we went long on the open of this candle here, and we've got a down candle, red candle. Now, immediately we're losing money here. Now we know that this market could easily shoot back up this way, could easily go up, but the fact is we're not in profit, we're now losing money. So what do? Well, you can't trail your stop loss in this case because you're down. So all you can really do is hope for a move back up, and hoping is never a good strategy. So in this case, you're hoping for a move back up. The move back up never comes, and in fact it starts going down, sliding down, and then a much bigger move back to the downside. So really the point I'm trying to make, probably not making it that well, but the point I'm trying to make is that when a trade goes well from the off, it's much easier for you to control your risk and to make money from it. You can move your stop along, move it to break even if you need to, then move it into profit, keep moving it up. Whereas if it doesn't go into profit straight away, anything could happen. You open yourself up to bigger losses. So that's why it's always better to cut your losses quickly. Now you might think this is just a cliche or a rule that people say or you hear about, read about, but I have actually tested this on historical data, and I have found that if you write some rules, if you program some code to exit a trade, I even exit a trade if it's not gone up 20 or 30 points. If it's not made a really big move to the upside, then I exit, and that really helps me to manage my risk and helps limit the large losses or the medium-sized losses that can really do damage. So you end up taking a lot of small paper cut losses, and then you get these big winners. Potentially you can get really big multi-day, multi-week winners from these runs. So that's the trading tip for today. The best trades work straight away. That's why you need to cut your losses on the ones that are not working. And of course, you don't just want to jump into a market after a loss. This is why it's so important to be patient. You want to wait and wait and wait until you get that trade that's going to go into profit straight away. Okay, momentum trades are normally the best for that. And breakout trades, because you want the momentum on your side, and you're going to move straight into profit, and then you can keep your stop loss tight. All right, so that's the trading tip for today. Was just going to have a look at the overall market. So we did have a good move to the upside today. We were down in the morning. European markets and Chinese markets, really just carrying on the negative sentiment that we've seen over the last few days. I mean, for me, the big down move on Monday was more to do with the fin trading. It was Easter holiday, European markets. A lot of European markets weren't open, so we had a bit of fin trading, not much to go on, and that's why we saw a big down move. Tuesday we saw a bit of a rebound, and then yesterday we've seen a much bigger rebound. So going forward, I think really it is a good sign that we've seen a rally yesterday, and if we look at the monthly chart, you can see that the upward trend really is still intact. I mean, there's nothing there to say that this is going to move into a vicious bear market. And we've even seen the last 3 candles, none of them are finishing on their lows. So it does suggest that there's support there in the market. But having said that, the issue is the news cycle and the interest rate cycle as well. So fundamentals, and also, but basically, for me at the moment, it's a negative sentiment market. So what that means is most news and most events are coming out negative. So for me, that means the best way to play this type of market is to short the rallies. You can buy dips on substantial dips, like a quick and sharp plunge. But for me, this is a bearish market. That could change on a dime, but at the moment, sentiment is mostly negative. So you need to keep a slight negative bias on this market. Alright, so that's about it for now. I am going to be doing more of these videos. As I say, I am a systems trader, but I do like to look at charts. If you want to check out my trading systems, go to my website at jbmard.com. I will be doing some trading tips and giving some insight into these systems that I've developed. But I do use some discretion as well. Normally what I do is I run my algorithms, run those in NAMI Broker, and then I check the charts, check the news, and that's when I execute a trade. So anyway, thanks for watching this video, and I will do another one soon. Cheers.